Welcome back to Algobot, the channel where we break down automated trading strategies for MetaTrader 5, one line of code at a time. I'm your host here at Algobot, and in today's deep dive, we're exploring an expert advisor called Displacement Surge Runner. This is a pure price action system. There are no moving averages, no oscillators, no indicators at all. Instead, it reads raw candles, hunts for explosive momentum, and then waits patiently for the market to prove that the momentum will continue. By the end of this video, you'll understand exactly how it arms a setup, how it triggers, and how it manages every single trade. Let's get into it. So what exactly is Displacement Surge Runner, and who is it for? At its heart, this expert advisor is a momentum continuation system that trades purely from price action. There is not a single indicator under the hood. No moving averages, no relative strength index, no average true range, nothing. Every decision comes from the raw open, high, low, and close of each candle. That makes it refreshingly transparent. You can see, with your own eyes, exactly why it took a trade. The core idea is something professional traders call displacement. When real institutional momentum enters a market, it doesn't tiptoe. It leaves behind a large, decisive candle whose body is far bigger than the surrounding bars, and which closes near its own extreme. That candle is a footprint of conviction. But here's the wisdom built into this strategy. One big candle on its own is often a trap. Institutions push, they pause, and then they push again. So rather than chasing that first explosive bar, the expert advisor waits. It arms a setup. It looks for a shallow pullback that respects the displacement, and it only pulls the trigger when the market proves the surge is resuming. This expert advisor can be attached to any symbol and any time frame in MetaTrader 5. Major forex pairs, gold, indices, whatever you prefer to study. Because it reads only candles, it adapts naturally to whatever instrument it's placed on. It's best suited to traders who are drawn to clean, rules-based momentum trading and who want to understand the mechanics of continuation entries rather than relying on a black box of stacked indicators. It's also a wonderful teaching tool because the logic maps so directly onto something you can observe on a bear chart. Throughout this video, keep in mind that we're studying this strategy for educational purposes. We want to understand how it thinks, not to make any promise about its results. Let's walk through the engine step by step. The strategy only acts once per fully closed candle, so it never reacts to the noise of a half-formed bar. On each new bar, it first measures the average body size of the recent candles. That's the average body period, set to 12 by default. This average becomes the momentum baseline, the yardstick for what normal looks like. Next, the expert advisor examines the candle that just closed and asks one question. Is this a displacement? To qualify, its body must be larger than the average body multiplied by the BodyExpansion factor, which defaults to 1.8. In plain English, the candle has to be at least 80% bigger than the recent norm. But size alone isn't enough. The strategy also checks the close strength. The candle must close near the extreme it pushed toward. A bullish displacement must close in the upper portion of its range, and a bearish one near its low. By default, it requires at least 60%, which filters out candles with long rejection wicks and keeps only those that close with genuine conviction. When both tests pass, the expert advisor does not chase the move. Instead, it arms a setup. It records the displacement candle's high, its low, and its midpoint, and then it waits. Here's the clever part. It wants a shallow pullback. For a long, price must hold above the displacement midpoint. If any candle dips below that midpoint, the pullback is too deep, momentum has failed, and the setup is discarded immediately. The trade only triggers on the continuation. For a long setup, the strategy signals an entry the moment a later candle closes back above the displacement high, proving the surge has resumed. For a short, it enters when a candle closes below the displacement low. Risk is defined entirely by the displacement candle. The stop loss sits just beyond the candle's origin extreme, pushed out by the stop buffer percent. The take profit is then placed at a fixed multiple of that risk, the reward risk setting, which defaults to 2, meaning the target is twice the distance to the stop. Finally, if the setup lingers longer than the continuation bar's window without triggering, the expert advisor expires it and goes back to hunting fresh. Patience in, patience out. Here's the actual MQL5 the expert advisor runs. just as you'd see it in Meta Editor. At the top are the inputs, the dials you can tune in the strategy tester. Lots sets your position size. Average body period is the look-back window for the momentum baseline. A larger number smooths it and makes displacement harder to flag. Body expansion is the multiplier a candle's body must beat. Raise it and you demand more violent moves. Lower it and you'll arm more often. CloseStrength controls how near the extreme the candle must close. Push it toward 1 and you only accept the cleanest, wick-free conviction candles. Continuation bars is your patience window. Stop buffer percent pads the stop beyond the origin, and reward risk sets how far the target sits relative to risk. Now look at the entry block for a long. The condition is a single line. If the just close bar's close is greater than the stored displacement high, the surge has resumed and we enter. The expert advisor reads the current ask price as the entry. It computes a buffer as the stop buffer percent times the displacement range, then places the stop just below the displacement low minus that buffer. Risk is simply entry minus stop. As long as that risk is positive, the take profit becomes entry plus reward risk times that risk, here 2 times. The values are normalized to the symbol's digits. The buy order is sent with the comment DSR long, and the setup is disarmed so we don't re-enter. The short side is a mirror image. It reads the bid, places the stop above the displacement high, and targets below the low. Clean, mechanical, and entirely driven by raw candles. Let's watch the strategy trade on this illustrative chart. On the left, we have a run of small, quiet candles. This is the baseline the expert advisor is measuring, the average body it will compare against. Then a large bullish candle erupts. Its body dwarfs the recent average and it closes right near its high. So the strategy flags it as a displacement and arms a long setup. Notice the 3 reference lines it draws. The displacement high in red, the midpoint in gold, and the low in green. Watch what happens next. Price pulls back gently, but the low of that pullback candle stays above the midpoint line. A shallow, healthy pause, exactly what we want. Then the continuation candle closes back above the displacement high, and the buy entry marker fires. The stop sits just below the displacement low, and the take profit is set at twice that risk. Price surges upward over the next candles and tags the take profit level. That's the long trade complete. Now the market rolls over. A large bearish candle drops hard and closes near its low. A fresh displacement, this time to the downside, and the strategy arms a short. Price ticks back up, but the high of the pullback holds below the new midpoint, keeping the setup alive. The very next candle closes below the displacement low, and the sell entry marker triggers. The stop rests just above the displacement high, and the target sits twice that distance below. Price slides down and reaches the second take profit. 2 trades, one long and one short, both built from nothing more than the shape and size of raw candles. Remember, this is a clean illustration for educational purposes. Real markets are far messier. And that's the Displacement Surge Runner. We covered how it defines a displacement candle through body expansion and CloseStrength, how it arms a setup and waits for a shallow pullback, and how it enters only on genuine continuation, with risk and reward anchored to the displacement candle itself. We also walked through the MQL5 code, and we watched a long and a short play out on the chart. Remember, everything here is for educational purposes only and is not financial advice. If you found this breakdown helpful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which expert advisor you'd like dissected next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.